morning, everybody. Welcome back to the Everyday Growth Advisors live stream. I hope you're having a great morning. It is another week where we're going to be reporting on these market conditions, and I hope that you are ready. Good evening to all the people in Singapore and Asia, and good morning to the people in the West, the Americas, and the rest of the world. We have a jam-packed schedule today. I'm going to try and get through it as much as I can, as quickly as I can. So good morning to all of you. And I just want to cover what happened last week first, and then we can dive into this week. Last week, we had strong PPI numbers. What is PPI? Producers Price Index, which was up 1% month over month, 4.2% year over year. Pretty good, performance, signaling a stronger expected recovery from the pandemic. Services sector also looking with a key rebound growth as pent-up demand starts to inch through the cracks, as I was mentioning on the webinar. If you haven't yet watched our webinar, please go to our channel. Click on the webinar, which is this one right here. Press on or hedge. Volatility continues. So go watch that one. A little bit of everything that I covered through the webinar there. Also covered the idea that China's GDP growth grew by 18%, slightly below expectations, but still a strong economic recovery ahead of the reopening of the peak pandemic economic activity. And Chinese stocks still remain the best investments right now, as we are continuing to see a weakness in this market. Remember that we can't guess where the bottom is, where the top is. We just know that this is somewhat near a key support region, which is right here. And we should buy on this dip for the next run up. So just going to put that out there. Do what you will with the information. Remember, this is not investment advice. This is just me doing an analysis for you so that you can understand what is going on with these market situations. Okay. And key highlights from this week, we have the headline CPI slightly higher than usual. So inflation starting to creep up, and which is clearly within the purview of the Fed. This were the inflation numbers that we were expecting. But remember, as inflation starts to creep up, that's going to get closer to the Fed's numbers of what they were expecting. And therefore, the most important thing that you should be taking note of here is a couple of things. Okay. First of all, if inflation numbers get higher at a quicker rate, then we will be seeing a much quicker pricing in of a Fed's short-term rate increase. That cycle will come quicker. I don't know if you guys have been following this stream for a while, but we have started to mention this sometime in March. Okay, through the March live streams, I have been mentioning that inflation might get here quicker than anticipated, and that may cause the Fed's projection for its federal funds rate to get here even quicker. If that happens, market's going to react to correct downward with the new levels of short-term interest rates. That will drive asset prices down, namely tech and higher beta stocks, which are more risky. Therefore, the growth names are still not a buy at the moment. Okay, if you're holding growth names, they are probably going to be a longer hold for about 6 to 8 months more. What are some growth names? Palantir. Okay, your growth names are CCIV, right? Growth stocks. BYND is also considered a growth stock, right? These are the ones that you want to hold off investing into. When I say investing into, I mean long-term holds, all right? So these are the ones you have to be extremely careful about. Also, the other thing that you have to take note is that the continued run in big tech, which was FANG and Microsoft and Google, saw the markets fully pricing in earnings season at this point. And this may result in a pullback with possible profit taking ahead of the big tech reporting earnings. Okay, and so during the webinar, I covered it very briefly, and I'm going to cover it once again over here. What are the key levels to watch on SPY, and is it the right time to hedge, as is the title of this live stream? I fully think that this is a great time to start hedging. Okay, we had a very nice wave up. We need a wave down in order to continue to the upside. And so this is a good time for you to take some positions that will be acting as a hedge to the downside. Now, personally, I already have been actively hedging for the past 1 to 2 weeks. So as soon as we started to approach this supply zone, which I had drawn out on the previous live streams, I already started to hedge up here. How did I hedge? I bought SPY puts and I bought a VIX combo debit spread for the upside, expiring sometime in July. Okay. I have a debit spread on the VIX 25 call, and I sold the 40 call for a debit spread on the VIX here, and that is something that I took for downside protection. Okay, I think this is a good time to start buying hedges as this market wants to correct downward ahead of earnings. Now, once earnings start coming out, remember, we need to fire on all cylinders to have another melt up. What does that mean? We need positive beats from big companies as well as good guidance. It is not enough that we just have good earnings beats. Okay, we need good guidance as well along with it. And Q2 usually is good earnings. Q1 report is usually a good earnings criteria. But remember, we need good guidance. Okay, so what are the key levels that we'll be watching for? Very closely on the SPY here. Just want to track that real quick with you guys. So the three key levels here, 4120s, 4190s, and then the 4050s. This is the key levels. First retracement, second retracement, third retracement based on the Fibonacci retracement here. The swing high, swing low right here. We're taking this a full retracement to the upside here. We're assuming that this is now the top. And we'll see if that plays out nicely. I'm going to leave this right here. Our targets are going to be as so. Okay, so first target, second target, and third target here. If we do break all these three levels, we're going to head down to the 4020 level, which is going to be right here, which is also going to be the 200 EMA last line of defense. So this will be the last level right here. Boom. Okay, that'll be sometime around the 200 EMA, and so these will be the four levels at which we'll be looking at SPY to retrace down to. That's your technical update right there. In terms of news, some bad news starting to cycle in here, which I was talking about last week. We need to cycle bad news in order for us to get a wave down, and so we're starting to see that now. Global cases hit weekly record despite vaccinations, and I've been mentioning ever since January and February that the moment that the market's gonna start pricing negative wave down is gonna be when we get news about vaccines being delayed or ineffective, and so we're starting to see that. We may see elevator move down, rug pull, before another continuation to the upside. So be careful of that. I think it is a very, very possible move down before another move up, just to trap overly exuberant bulls who are in here. Okay, in terms of news today, crypto market slightly slumped on treasuries, wanting to crack down on some companies that were, I think, hassled for using Bitcoin incorrectly or something. And then, yeah, okay, so that's about that. On the Wall Street Journal side, let's have a look here and see what they're reporting. See if we can get any cadence here. Stock futures tick down, Dow records. Okay, lithium miners, Inc. 3 billion merger. Stock rally broadens, encouraging sign for bull market. WeWork's new listing plan. Okay. Foreign buying of Chinese government bonds stall. India, Adani, Okay, Landman, Okay, so nothing much here. This week we have some key companies reporting earnings. Netflix, we have a bunch of different ones here. Let me tell you real quick which ones are they. Netflix, we have Johnson & Johnson, P&G, Procter & Gamble. We have a bunch of banks, the residual banks, Comerica, KeyBank. We have American Express, AT&T, Intel, Snapchat. We have Discover Financial, Chipotle, Nextara Energy, NASDAQ, let's see, Coca-Cola, IBM, United Airlines. Those are reporting today. So keep your eyes peeled out for that. Let's have a look at, very quickly, the insider traders here. Any big ones? BlackRock, so 17%, Senior Managing Director. Not too crazy. This guy also, PayPal, okay, Roku. CEO and chairman sold 25,000 shares, which is 30% stake, $9 million. That's notable. Roku CEO selling shares. That could be something. And then Coinbase. Holy moly. Wow. Okay then. 10% owner. Venture firm. Okay, venture firm. Okay, so this is a insider. Insider selling 100% stake of his Coinbase at a spot of 386. Wow, he really got it at the tippy top right there. And then we have a bunch of others, Coinbase directors selling a bunch of their shares to the tune of about 20 million shares. Wow. Okay then. Let's see, $20 million, $34 million here. Wait a minute. Oh wow, this guy's, Holy moly, this guy sold $1.8 billion worth of his stake. That is crazy. That is notable. Okay, that is notable. These are very notable transactions right here on Coinbase. Nvidia director also sold last week, 68%. And then you have Coinbase, another Coinbase 10% owner, sold another $1.8 billion at a 386 level as well. Same guy, wasn't he? Was he the same guy? No, he wasn't the same guy. Okay then. Wow, that's very notable. Interesting. A lot of Coinbase insider transactions. You can see all of these. All cashing out their investments. This one, another one, 43 million, another 99 million, another 200 some million. Wow, 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 wow. All the insiders cashing out. Very interesting. Very, very interesting. That is extremely, it's extremely interesting in terms of the fact that I wonder why they're selling, if they believe in their own shares or their own company. Okay, well, that's something you should take note of. Treasury rates here, stabilizing, 10-year kind of creeping back up to 1.59. As I have mentioned, my target for the federal, the 10-year rate here is going to be about 1.7, 1.8. Even 2.0 is possibly a good amount of a interest rate that we'll get to before we see a full solidification correction. So that's important notification here, okay? And then we can move on to Beyond in a second. Coin direct listing, the only way to share get to outsiders, insiders sell, otherwise it stays private. Yes, I do understand that for sure, but it's just interesting that some of them sold 100% of their stake. That's the thing that kind of is interesting to me. It's not about the fact that they're selling. It's the fact that they're selling 100% of their stake. I would expect some of them to hold some skin in the game, unless they're planning to dilute more shares, which would be kind of a nightmare in my opinion, right? So let's see what it's trading at pre-market. Yeah, it's down 3%. So that's the only thing that I kind of am looking at it from my perspective. Why would they sell 100% of their stake if they believe in their own business? But I do definitely see it from your point as well. That's the only way the outsiders can get the shares. So yeah. Okay. Great. Okay, let's get into the SPY technical breakdown here one more time real quick, something that we want to keep track of. There was a breakaway gap here on SPY and NASDAQ. This is what we call a breakaway gap on both indexes. The Dow still remains intact here. And what we can see is this breakaway gap looks bearish for the time being on the NASDAQ, okay? And this breakaway gap might be the start of a possible downtrend. We don't know for sure, but a correction down to the 50 EMA seems certain here. Corrective wave down this week. So be extremely careful, and I would say hedge your portfolio. That's something that you should be doing as is, okay? You can do it through numerous ways, and I recommend either through VIX or through buying an inverse ETF, or just outright short or buy puts on SPY and NASDAQ, which is QQQ, okay? All right. Cool. Let's have a look at the Beyond chart real quick. So this one is definitely interesting. We have a we had a long downtrend on this one. It's starting to look like it wants to creep up and make a golden cross on the 1 hour. Okay. You can see that the 50 EMA has been upward sloping here. Beyond has been creeping up slowly. We might need some kind of a catalyst again to push this up to the upside. A break above the 145, 142, this level right here would be bullish after a consolidation back in this region right here to make another move to the upside at the 160s or so again, okay? So that's what I'm looking at on Beyond here to the upside. I really want to see a breakout of this level here within this zone, the gray zone that I have here, which is the next supply zone. And then if we can break above this and hold above this, this will be bullish for the upside to the 160, 170 region, which is up here, okay? In terms of price action or options flow, I haven't seen any yet. But yeah, volume has been relatively low. Not unless we see volume buying, we can enter this. So right now, this is a marinade until we see that happening, okay? If you look at the events of the presentation from this past Q4 and the year-end presentation here, what I like about this company so far is its penetration of this niche market, as well as its distribution channels that it has built. Okay, so they use proprietary science to redefine meat, blah blah blah. Okay, I'm sure you guys know all of this already. Reducing this, global greenhouse gas, agricultural, livestock, farm animals, blah blah blah. Reducing all that. What I also like is they spend more than anybody in terms of R&D, which is making up 7.8% of their net revenues, which is a good move forward. This is more of a tech company than it is a food production company because of the R&D cost that goes involved in production. So they have a large experienced team of compost scientists, researchers, technicians, chefs, and lots of them work on different parts of the company, which is mainly developing new forms of meat. Okay. Here are some notable updates which I was looking at, which were really great in my opinion. CAGR here looks 132%. That's very high across these 4 years: 2017, 18, 19, and 2020. Also disrupting large food category in food, 1.4 trillion global meat category, and 270 US meat category. And then they say Beyond Meat is the future protein. 37% year-over-year growth in revenues, 28,000 US retail rollout, international outlets 52,000, and they've increased manufacturing capacity 1.5. Notable is they're actually opening up a plant in Shanghai, which will also add additional, I believe, 50 to 60 basis point increase in manufacturing productivity, which is going to be nice. And 42,000 outlets in food service rollout in the US. Total 122,000 worldwide outlets. If you like this stream and you like what we do here, make sure you guys take a second out of your day to smash the like button. I would truly appreciate it if you can take your time to do that. That's something that really helps me out a lot to let this stream reach more people. So click the thumbs up if you like what we do here and the breakdowns of these markets. I really truly appreciate that. Looking at brand awareness here and looking at distribution, they have now increased their footprint by 294% to total outlets worldwide. And the brand awareness is now growing pretty massively here, which I would like to take note of. Okay, market share trends are up about 400 basis points the last year, and this is the omni-channel distribution channels that they are kind of penetrating from. US retail, they have quite a big bunch of companies: Walmart, Kroger, Target, Sam's Club, Costco, Whole Foods, right? Sprouts, BJ's, lots of them. Okay, and then let's say US food service companies that are using Beyond Meat: Carl's Jr., Dunkin', Denny's, okay, BurgerFi, Luna, TGI Fridays, Cisco, big companies. International brands: Starbucks, Alibaba Group, okay, Sainsbury, A&W, Metro, big ones. Some German companies too. And then we have notable companies in terms of customers. You have Pizza Hut, you have Starbucks, McDonald's. They're all using their products. KFC in an expanded test. This one's in a limited test. Permanent item on McDonald's, and limited test in McDonald's, and they're permanent items on Starbucks right now. This is really great news in my opinion. And here's the financial update, which we will be going through more on Wednesday when we do fundamental analysis. Gross profit over year over year is actually down 24%, but then net profit's up 3.5%, which means that they have increased expenses. However, net margins have actually gone up, which is actually nice. So you can see here, net revenue by growth is up about 104%. And this has all happened during the pandemic, which is very, very important. Okay, so you can see here, gross profit margin, pretty steady at the 30% level. This is great. And then you have operating expenses, which are about 40%, which is a majority of it, well, 7.8% of the net revenues make up are R&D. So about 1/4 of this is going straight from R&D, which is important. Then they have selling and general expenses, which are also important. Okay. I'll go through more on the financials on Wednesday, but I just want to point out a couple of things. On the balance sheet here, what's important is they have a good amount of cash on hand, so this business is pretty stable right now. Receivables are also pretty healthy, and what's notable is that they've built considerable amount of inventory. So this is something that might be good or might not be good. Companies like this generally don't want to have high levels of inventory. They want to actually continue to churn their inventory so that they can drive revenue out of it, right? You don't want to be holding a bunch of inventory. But because this is pandemic related, so we should, as investors, give them a little bit of benefit of doubt that this may continue to be a high level of inventory till demand that is pent up starts to clear. Okay. Total current assets are about the same from a year ago. Property, plant, and equipment is up about 3 times, which is what I was telling you guys about, the expansion into Shanghai and expansion into other parts of the world, in the supply chain. This is what is important right now in the balance sheet. This is something you have to take note of. They're investing into long-term drive, and I think that's good for the future of the business. Therefore, all in all, I think this is a great opportunity to purchase. If we're looking at a long-term growth prospect, seems like a good time to buy, okay? And then we have, look at the total long-term assets that have increased almost a third because of the investments, okay? And long-term debt have decreased substantially from 20 million to almost nothing. So they paid down some debt as well, long-term debt. They must have raised that cash by either selling stock, or they must have raised through selling bonds, which I have to dig deeper into. So that's something that we have to look at, okay? These are all important prospects of the balance sheet which we have to look at. How is the company generating revenue? Where is it generating cash? Where, if they are increasing property, plant, equipment, where is that money coming from? If cash on hand is increasing and decreasing, what does that mean? We have to dissect this levels of these different parts. That's how we dig deeper into these businesses and find out if they're good investments at the moment, okay? Cash flow statement I'll go through on Wednesday, but that's all you need to know about this right now. In terms of a purchase, I think that a company is in a good position to benefit from long-term tailwinds, okay, as this market continually gains traction. Personally, I love Beyond Meat. I've had it multiple times. It's a great product. Better than Impossible, in my opinion. Just personal preference, obviously, here. But I'm sure that many others have different opinions, okay? And that's all I have for you guys today. I say, make sure that you are hedged, okay? This seems like a good time to pick up hedges. And also at the same time, make sure that you don't over allocate risk too much. We have a fully priced in market with the earnings season, and lots of companies reporting earnings this week. So expect some possible whipsaws back and forth, and keep that tight, okay? In the meantime, I wish you guys all the best for this coming week, and I love you guys. Thank you very much for attending. If you can, once again, take a second out of your day. There's almost 30-something people here watching this stream. If you could take a second and hit the like button, that would truly, truly mean a lot to me, and I would truly appreciate it. All right? Alrighty then, guys. Have a good one. I will see the trading team on the Discord in a little bit. I'm going to go have dinner, and I'll be popping into there a little later. So thank you very much for attending, and I will see you all on Wednesday for the fundamental analysis. I'll also be putting out stuff along the way for you guys on Twitter, on Instagram, whatever that I see. Also, last chance to sign up for the beginners course if you haven't, okay? Today's the last day to sign up. So if you want to sign up for the beginners course that starts in about 12 hours from now, this is your last chance to sign up. And so make sure you go over to our website, learncompoundgrow.com, and sign up through our website, okay? And you can go over the courses, click on beginner, and you will see our course sign up page right here, where you can click enroll and get enrollment into the course. Alrighty, have a good one, guys, and I will see you on Wednesday. Take care, and bye-bye.